Hello, today we'll be discussing Cadeler. The company that is growing its revenue by triple digits has a multi-billion-dollar backlog, very favorable financing, and yet somehow it's trading at a forward PE of just 4. I believe it is a great buying opportunity. Stay tuned if you want to learn why. For those of you who don't know what Cadeler do, the company manages a fleet of wind turbine installation vessels, and as the name may suggest, they make money on constructing offshore wind farms. The scarcity of wind turbine installation vessels capable of handling 15 plus megawatt mega turbines makes them a premium, highly valued asset. And Cadeler is a market leader with what is widely considered the largest and the most modern fleet explicitly designed and upgraded for this high-capacity installation work. Cadeler currently is operating 9 specialized offshore jackup vessels. They also have an additional 3 new vessels still under construction, bringing their expected total fleet to 12 vessels by mid-2027. The single biggest indicator of long-term stability for Cadeler is the company's massive backlog. For H1 2025, the company has reported 2.5 billion euros of backlog, and this is effectively securing long-term revenue visibility and validate the premium demand for its specialized fleet. Also, recently there was news that Cadeler has signed another 2 firm contracts with a combined value projected to be approximately 500 million euros. So for the Q3, I expect the company reporting a backlog of about 3 billion euros. Also, during my research, I have found this graph by US Department of Energy that shows that the offshore wind capacity is expected to more than quadruple by year 2033. All this capacity must be built by someone, and I believe that Cadeler are positioned better than anyone else to capitalize on this effort. I believe it is important to note that 97% of total backlog has reached final investment decision. That is important because if customer decides to cancel the contract, it would result in a hefty fee, as it did happen with Ørsted canceling construction of Hornsea 4 and paying Cadeler 100 million cancellation fee for it. Of course, a cancellation of a major project wasn't a good news for Cadeler investors, but for us it provides a glimpse into how a company protects itself against situations like that. And with recent news that the major projects are coming Cadeler's way, I'm reassured in the future demand for the company's services. As we can see from their H1 2025 presentation, a cancellation fee of 100 million euros substantially increased revenue by almost 50%, but even without it, the company growing its revenue, operating profit massively, which is also visible in company's valuation metrics. As I mentioned in the intro, the forward PE for Cadeler stock is just 4 and a PEG ratio of 0.07, and with a operating margin of 51%, it leaves me a very little doubt in the quality of the business. And the only risk that I wanted to assess after this point was the debt. On this page we can see the summary of their debt situation. They are using green corporate facility loans, which are usually providing better terms than regular loans. The current loans are 200 million euros, and the loan repayments, or simply interest paid, is 23 million. Let's compare it against the cash flow statement. Here's the cash flow statement. We're looking for operating cash flow, which is at 71 million, up nicely from 17 million in 2024. Current cash flow is about 3 times bigger than the interest expenses, so we can deduce that the company is able to service their debt while also actively expanding their fleet. For H1 2025, we had 7 active vessels at utilization rate of 67%, and it yielded operational cash flow of 72 million. Revenue is 299, but 100 of it was cancellation fee, so for calculation purposes we will use 199. Projection is that there are 9 ships now, and let's put it at 80% utilization rate, which is more aligned with the average for the industry. It should give us a operational cash flow of 109 and revenue of 305 million euros, which puts my approximation right in the middle of the expected revenue for the second half of the year. This would be a 54% increase in the revenue between H2 and H1, and it simply shows how fast this business is growing. Finally, I want to show you this slide. It states that the undersupply of installation vessels is expected from 2029, and that the management is looking forward to a busy end of the decade, where their large and efficient fleet is an essential enabler. From what I've read, I believe that there is a possibility that the management is right, and that the spike in demand will be met with a shortage of the supply of specialized vessels. One of the ways to find a multi-bagger is to invest early, because by the time that it would be obvious that this demand is undersupplied, the stock would be selling at much higher valuation. Even if the management is just half right, remember that right now you're paying just 4 times forward earnings, which is as cheap as it gets. Hopefully you found this video useful. Please like and subscribe, or better yet, leave a comment with your thoughts on CADLR. Do your own research, get rich, and have a nice day.